Economists make predictions based on the data that they have been presented with. Incentives often mold and manipulate their view, often choosing to ignore certain facts. Other than the gross expansion of debt, if there is anything we have learned from the financial crisis, economists are always wrong about their predictions. You came here for the truth, so let me unveil that for you. Today we're going to talk about growth, or the lack thereof. U.S. seen expanding 1.8% in the fourth quarter, and that's according to the Atlanta Fed. So we have this thing that's called the GDP Now forecast model. And this right here is supposedly a fairly accurate indicator of judging how well the growth will be. However, what I have found, what you may have found as well, is that over time we seem to find that they're wrong. That's right. They always overstate how much growth they anticipate. So here you have a nation like the U.S., which is dying year over year, and yet they're able to predict that in the next quarter, in the next year, they'll have a certain amount of growth. Well, it's always going under that. The only time that I ever saw was the time that they had 5% GDP growth, and that was because of the Obamacare basically taking effect and people had to spend more on healthcare. It wasn't a boost to the economy in any way. It was actually a detriment. The U.S. economy is on track to grow 1.8% in the fourth quarter after data showed a slower pace of consumer spending in October. That's according to one model. Of course, there are different factors which determine the actual rate, but let's just move on quickly here. This was slower than the Fed's regional Fed prior estimate of 2.3% in November. So once again, they always tell you right up front, okay, it's going to be, let's say, 5%, and then they revise that to a lower level later on, and they basically come to their senses. And the reason I'm mentioning this is not just because of the Federal Reserve, not just because of the GDP, but all numbers in general. They're always going to be much worse than the numbers were stated. They need to paint a rosy picture so that the stock market takes that and prices it into the market itself. This is what I really wanted to get to for this video. Just basically make you understand that the stock market is there and the prices are determined not just what's at face value. Let's say a certain stock has a certain number of sales or a certain number of whatever figure this might be. What we have to determine is that when we look at the Federal Reserve, it's what they say. Oh yes, we are going to print money in 10 years from now. Well, okay, there you go. The stock market will base it on that. Even if the action hasn't been taken, it's all about the words they use. So pay attention to this as well. Understand that these estimates are always fraudulent. They're always boosted up. And if you read Frank Partnoy's book, Infectious Greed, you'll get a much better detail on this right here. And there, of course, there are others. But basically what they show you is that they can pump up their profits in any one of these quarters and use that to their advantage. Of course, we have the GDP numbers coming out of Europe, which of course includes illegal activity such as drug use and prostitution. So we know that all of these numbers are in fact so phony. If you found this video informative, please give me a thumbs up. And last but not least, if you haven't already, you definitely want to check out my website. I have a free e-course on there, which is basically great for everyone, particularly the beginners, but everyone can definitely benefit from it. It's a whole bunch of different videos that has a lot of easy to understand diagrams and images. So check that out. It's at themoneygps.com, and you go click on the free e-course link and watch the videos on there. Take care.